how do you go from 0 to 118 properties under management, 100 million of assets under management?
I always joke that there's probably easier ways to make money than scaling a management company. Scaling any business is really hard, especially when you're not raising outside capital. It's arguably one of the hardest things that I've done.
When you say I've seen people finance single family properties with commercial loans, I thought that was only possible if you have more than 4 units.
Nobody wants to loan you any money when you start, but once you have some scale and you do have some predictability in your revenue and you get the 3 years under your belt of IRS returns and you're able to show that growth, the options, there are a lot more of them.
You cannot predict the worst case scenario. The definition of a black swan event is something that hasn't happened before. If you take the last worst thing that happened and you put that as your stress test, by definition, that's not the worst.
You don't really know until you try something. You've got to learn from failure. I think entrepreneurship changes your definition of failure. You just expect it along the way. It just means that you're learning. It doesn't necessarily mean that it's final.
What allowed you to grow so fast? What does a professional sales process for homeowner acquisition look like for a property management company? Hello, everyone, and welcome to the Hospitality Edge podcast, where we bring together what we think are two sides of the same coin, real estate and hospitality, and where we really aim to bring together operators, founders, leaders, investors in the vacation rental, short-term rental, and real estate world, so they can tell us about their stories, the lessons they have learned along the way, and maybe even some of the mistakes that they might have made along the way, so we don't have to make those same mistakes ourselves. Today, I am super excited to be here with Joshua Hatter. He's the CEO at Curated Vacation Properties. He's also the founding director at Keys Collective. So his business essentially has $100 million of properties under management, 10 million in bookings a year, on pace to reach 15 million in bookings a year. We're talking 91 properties under management. We're talking 118 listings. Other than that, Josh is also involved in the nonprofit space, with Keys Collective being a mastermind, where his goal there is really to give back. So he's really into sharing his knowledge, sharing his advice. So I just wanted to say, Josh, that's something I really appreciate about you from the conversations we've had until now, how intentional you are about wanting to contribute back with all the things you've learned. So super excited to dive into all of this. Before we get started, where are you taking the call from, Josh?
I'm in Charleston, South Carolina. Thanks for having me, by the way. Appreciate it.
Amazing. Perfect. Let's start, Josh, with a question that I like to start with, which is, if you were to start all over again with what you know today, right, in this business, both the real estate as well as the vacation rental property management side, and you could do anything differently and or talk to the younger you and give some piece of advice, some heads up, some warning, whatever that might be, what is it that you would either do differently or advise yourself if you were starting over again?
Yeah, I think, I always joke that there's probably easier ways to make money than scaling a management company. Scaling any business is really hard, especially when you're not raising outside capital. Really trying to balance the scale and the growth and the expenses that come with that in terms of particularly humans, with the cash flow. It's arguably one of the hardest things that I've done. It's also incredibly fun. But I think, I spent almost 20 years in corporate America before quitting. I actually didn't quit my full-time job until December 19th of 2021. So I'm a little over 3 years from that. And, really looking back on it, I think I was under the misconception that it would be impossible to get financing for deals if I didn't have a full-time job. I had no experience at the time with commercial deals. And so, commercial deals are really underwritten based on the strength of the deal. Obviously, the borrower is important. The relationship of the bank with the borrower is very important. The better the relationship, obviously, the easier it is to get something underwritten and obtain financing on a commercial deal. But that really, I think, kind of kept me in corporate America probably longer than I otherwise would have stayed, between that and COVID happening in 2020. Otherwise, I wish I would have left corporate America 10 years earlier.
And what do you think? So what do you think it was that kept you there? The golden handcuffs that they call. Um, but yeah, what was it that made it? Was it something that you were thinking about, like I should be leaving, but you were just not leaving because of this, fear or
Yeah, I think it
whatever,
was
or
ignorance.
ignorance? Okay.
Yeah, I think it was ignorance. Yeah, just not understanding the mechanics of commercial deals. I think really, and also obviously it's fear of the unknown, right? A lot of people just never get started. I had been burning the candle at both ends so long that people both in hospitality and the industry that I was working in were both saying like, "What are you doing? You're killing yourself. Why don't you pick one or the other?" So, yeah, I really waited a long time to kind of make that jump. Um, and really a lot of that I think is just around the ignorance of how commercial deals worked. So, the mechanics and then even developing those relationships. I mean, I could had I known how things worked, which is part of the start of Keys Collective, I would have probably jumped a little bit earlier because I would have had that comfort level, right? But it's just like anything when you're starting out, you're trying to talk to people. That's one of the reasons doing things like this is so important to me. But you're trying to talk to different people to learn from their mistakes, like you mentioned up front. And so the more you can do that, obviously, the better you can educate yourself. But the reality is, just like anything in life, you don't really know until you try something,
Mm,
right? You've got to learn from failure. I think entrepreneurship changes your definition of failure. You just expect it along the way. It just means that you're learning. It doesn't necessarily mean that it's final. So it's all of those things. I actually have been in another mastermind group called GoBundance for about 4 years now. I'm coming up on my renewal again, and that has arguably been one of the biggest game changers for me. And so it's the old Jim Rohn quote of you're the sum of the five people you spend the most time with. I don't think I understood how true that really is until being in this group for several years, and they wind up putting you in these little pods they call them, and so I've got a group of a few guys. We have four of us, and all over the country, from Florida all the way to LA and up to Boston, and then me. And we dial in every Monday and we talk about what our goals are. And we have our accountabilities for the week. And we have to text that to the group. On Fridays, we give updates on our accountabilities. And I love those guys genuinely. I mean, they're a huge part of my life. Everybody's coming to Charleston here in the next 5 weeks or so, just to kind of get together and really go over like what are our life goals, what are we trying to accomplish, and what happens with doing that in terms of accountability. If you tell people that you want to do something, and then after a week, 2 weeks, 5 weeks, 10 weeks, you haven't done anything, if people are really holding you accountable, at some point they're saying, "Hey, you keep saying you want to do this, you haven't done anything. What's up?" Right? And most people don't have that level of accountability in their life as adults. You might have a boss that you work for at your job, but he's not there every single week asking you what you're doing for that week, right? And this isn't just with finances or career too. Like we talk about family goals, family, friends, faith for some people. For me, it's contribution and giving back. But it's every single area of your life and trying to maximize your potential. And I think most people don't develop that inner circle to really hold them accountable and pick them up in the lows and celebrate with them in the highs. I think one of the sad things that I've seen as you start to experience some success, people think it happened overnight, right? Yeah, overnight success, 10 years in the making couldn't be any more true. They see something happen and well, they make excuses for themselves. Well, you just did that because, you had a leg up or you started out with this or you got lucky on timing for that. And, they try to take shots and bring you down instead of being able to truly celebrate the highs with you. And so do you have the right inner circle around you? I mean, it gets you through the lows and it makes you comfortable to be able to celebrate the highs. A lot of people don't talk about their successes when they get to a certain point because they're afraid they'll come across as arrogant or rubbing it in somebody's face. So
Mm.
that inner circle, man, that's if I wish I would have understood the importance of that 20 years ago, and how that can really change your life.
Love it. So two things there, right? You said one is understanding I don't need this W-2 income to finance properties because once I finance them, commercially, then, we're going based on the property's ability to cover the debt. So therefore, just start doing this earlier full time if possible. And then the second thing you're saying is, be careful with who you spend time with, have people that can keep you accountable up to a higher standard. I love that. Let's talk a little bit about the first point you mentioned there with regards to commercial uh, lending. I was just, funny enough, I was just recording another episode with someone that also operates properties in the greater, well, he operates his properties in the greater Phoenix area. And in addition to that, he has a mortgage lending company. And we were talking about, I always love comparing the financing of the different asset classes, right? You've got
Yeah.
short-term rentals, which a lot of it is single family, and so yes, you can get this DSCR loans, that service coverage ratio loans, but we were talking about the difference between that and a true commercial loan, where it's really truly based on the assets ability to service the debt, and also the valuation of the property will also go according to the net operating income. So if you increase rent, you can directly control and almost predict with some calculations and some cap rate assumptions, like the future value of the property. When you look at
Exactly.
those two, when you look at what's different between financing short-term rentals through DSCR loans and commercial loans, what's different and what's similar?
Well, even though commercial loans are still looking at DSCR, right?
Exactly.
But if you go to just your normal short term rental known entities that do DSCR loans, there's not they're bigger companies and they're doing it at scale, so they're not necessarily looking at relationships. One thing I learned really quickly, not to slam a major bank here, but Truist, it was my main bank for a long time, and it just was difficult to get things done, right? Like, I don't have the level of assets that would make them care about me as a borrower, and what am I trying to do, and how can they maximize that? And what's been successful for me is local and community banks. Those are where you can still walk in and you know who you're dealing with, and they don't just know the deal, right? That they're aware of your life and where you're headed and how they can help. And there's different products along the way. It's just like buying anything else, right? There's a bunch of different products. One thing you didn't mention that a lot of people use when they're starting out is just a vacation home loan, right? And so they may put 10% down. A lot of the loans that you see with those now with the current interest rates are just not attractive. So there's so many different ways to get there, but I think it's the whole, be steadfast in the goal, but flexible in how you get there in the journey. And yeah, I mean, that's what's been successful for me is commercial loans, particularly with just some local community banks that are based here in South Carolina, and actually now Georgia, because we're under contract on a 16 key boutique in Savannah.
And so you gotta have more than 4 units, no, to be able to go with a commercial loan. So I guess now we're getting into how do you get the best of both worlds? How do you get the best of the short-term rental cash flow with the commercial, lending and leverage possibilities and value add possibilities, which is where you can get into that, I guess, yeah, boutique hotel space, which
Yep.
is something that I know you're into as well. Can you tell us a little bit more about that?
Yeah, it's really so that's actually changed a little bit, I think, over the last 5 years with the maturity of this asset class. Again, the speed bump that we had with COVID, nobody was lending on hospitality real estate in 2020, and it really took going into probably mid to late 2021. I had been working on a deal through most of 2020, and I don't think we closed until October of 21. But um, yeah, it's definitely a lot different now. I mean, I see people do commercial loans on single family short term rentals all the time. It really is relationship based. Again, they still look at DSCR when they're underwriting it, but they're also looking at your history. How many times have you done this? Have you invested in this market before? And then also the bank has, they always refer to it as buckets, right? So they have a hospitality real estate bucket, and some banks just don't lend on those assets, particularly with the boutique inns. It's such a unique asset class. It's not a branded hotel and it's not a short term rental, and so sometimes the bank's just like, we don't know what to do with this, right? So you do have to also find a bank that is willing to lend on that asset, and not everyone is, whether even if they are a small local bank. But if you can find somebody that has room in their hospitality bucket, so to speak, then they're typically willing to at least float terms and provide a term sheet to you on that asset. But I see people do commercial loans with single family short-term rentals all the time now. That's definitely changed over the last 10 years, I think, with how people view the assets. Initially, it's interesting because this has obviously inflated the value of a lot of those assets, right? If you were to look at a single family home that's not a short term rental and you ran the numbers as just a regular long term rental, the whole reason people do short term rentals is because the potential income is so much higher, right? Like in the markets we operate in, you're looking at 3 to 4 times the amount of what a long term rental is. And so for a long time with the underwriting, they would just look at it and be like, this valuation doesn't make sense. How do I get there? But I think there's a lot more of a comfort level now. And there's also way more data, right? I mean, I've been doing this for years now. So in the markets we operate, I can tell you how much a 1 bedroom, 2 bedroom, 3 bedroom, all the way up to 9 bedrooms are going to perform, just based on the years of data that we have now. So it's a lot easier to underwrite today than it was even 3 or 4 years ago.
Hmm. Help me connect the dots here, because from one side, you're right. Both commercial loans as well as single family loans will look at, single family DSCR loans will look at DSCR. But in that case, when you say I've seen people finance single family properties with commercial loans, I thought that was only possible if you have more than 4 units. So in that case, what exactly is different in a DSCR loan versus a commercial loan for a single family property? Is it just the approach to the valuation, the way they approach the valuation based on the
Definitely.
income, or is there something else?
Absolutely. Yeah, no, it's really being able to look at that asset for the income that it generates. The licensing is also, I always say, illegal doesn't scale. So we tend to operate in markets that are highly regulated from a government perspective. And so the market that we operate, in the Southeast are, they're highly specialized. And so, there's a definition for commercial short-term rental. And there's another one for residential short-term rental. And that kind of makes the delineation between the two as well. But yeah, it's really just being able to look at it as how much income does it generate versus just looking at the house, for somebody to live in or operate as a long term rental, and changing the lens that you look through it with. It changes the valuation just because of the income potential difference.
Interesting. So a couple of things. First of all, help us understand, how do you go from zero to 118 properties under management, 100 million of assets under management. Tell us a little bit about that founding story of how you got into this space.
A lot of tears, sleepless nights, tossing and turning. Yeah, I mean, COVID was interesting, right? It's like literally everything I spent years building. I first listed a tiny 1 bedroom condo I had in downtown Charleston, on VRBO in 2012, long before the proliferation of Airbnb. So, now Airbnb is $100 billion company by itself. That's totally changed the asset class, in my opinion. But yeah, it was a lot of, I like to say, playing Monopoly in real life, right? I don't have a good background. My background's terrible. My father died in prison, all types of abuse. I didn't have a leg up. I think a lot of people, they might be born on second or third base and they thought they hit a triple. right? I was just trying to lean in and get hit by a pitch so I could get on base and try to figure out how to play the game, to use the baseball analogy. Um, but with that, it's a matter of talking to the right people, connecting the dots. Um, a lot of people are willing to, if you just ask for a few minutes of their time, they're willing to stop and talk to you about you know whatever they're an expert in. And this is definitely it for me. This is one of the reasons why doing podcast and setting up Keys Collective are so important to me. I like to say this asset class changed my life, and if I could do that for somebody else and alter their family's future, then I would love to be able to do that and pay it forward. And in the same way, people did that with me along the way. You have to have the courage for somebody to say no to you, and a lot of times you fail in entrepreneurship. It just changes your definition of how you look at failure. But over time, you run into people that are really willing to slow down and give you some pointers. My realtor, for instance, I mean, he's grown with me. I think I've done $25 million worth of transactions with him over the last 5 years or so. But I didn't have anything when I met him. I was really trying to understand the space, and I really value that, right, over time. Having that loyalty and somebody that has invested in you, and now being able to refer sales for you don't have the number of listings we do without a couple of them being listed for sale at any given moment, right? So now working with him and being able to kind of give back to him a bit as he can collect those commissions during the transaction. It's cool to have that value add relationship on both sides. But yeah, I think it's a matter of being able to put yourself out there. Most people just simply don't do it. They talk about it all day. They overanalyze things, but they don't just jump in and fail and get things done. You've got to fail and learn over and over again. As far as scale, I think one of the things that has helped us now, we CVP itself has grown. You mentioned the 10 million. We did 10.1 million in bookings and hosted over 25,000 guests in last year alone. And we actually paused sales for 9 months. Over the last 6 years, CVP has grown on average 100% every single year. You can't do that without breaking some things operationally. And so we really paused to look at, how are we doing laundry? How are we doing inspections? Setting up a concierge program for guest services. How are we doing owner statements, building an owner portal from scratch, investing in the company and the systems, processes, and technology. I think most companies, at least if you raise outside capital, you're not necessarily looking to pause sales because it's all about hitting the next growth milestone, right? And one of the luxuries I think of being self-funded is we have the ability to do that. And even still, I think if anything, it'll propel our growth for the next 5 years. So that's been huge for us. I also brought in a couple of partners. I'll be 44 in August. I'm getting a little older in terms of this asset class. There's a lot of young guys in the tech space supporting it, in their early to mid 20s now, which is fun to see. But I brought in two guys that are younger than me that are better than me at what they do. Um, a couple things that I've done from the very beginning of CVP was sales and revenue management. And so I brought in some guys that literally worked at some of the dynamic pricing platforms, right? So Beyond Pricing and Wheelhouse. And so they don't just understand how to do it; they really understand the intricacies of the technology, the product roadmap, and where it's headed. All those types of things to be able to maximize it. And they are hungry. And so I brought them into the business about 18 months ago. It has gone wonderfully. It's been amazing. You always have bumps in the road, but the three of us really understand each other's strengths and weaknesses now, and we really lean into that. So, yeah, that it was very lonely for a long time. But I think bringing in partners at the point that I did has really propelled us to our next phase of growth. The reason I did that, I had gotten a couple of kind of informal offers for $1 million on the management company. And, I kept looking at myself going, you already did the hard part. That's not life changing at that point. I think I was around 2 million or so myself. So, that wasn't to me, that wasn't reaching my fullest potential. And I'd already gone through the really hard part of the grind. And so, this is a couple years ago. We hit 5.4 million in sales, in bookings. And I was talking to these two guys early that year, and really, my sales pitch there to them, they were going to start their own company. And I said, "Hey guys, CVP will do 5 million in bookings this year. It's way easier to go from 5 to 50 than it is from 0 to 5. And you can focus on the things that you're good at." And so that has really been huge for me in terms of continuing the acceleration. It also, having other people to bounce things off of, right? It goes back to that inner circle thing, right? It's extra accountability, and it's being able to lean into other people's strengths instead of having to be everything to everyone. And giving other people an opportunity as well too has been really cool. So, yeah, a lot of things. I think we've also hired right well. I like to say CVP is no longer Pinocchio. It's becoming a real boy. A year ago, we rolled out a 401k and 14 days of PTO for employees, which we hadn't done prior. And then this year, we rolled out medical, dental, vision insurance. The things that matter to people in terms of a legitimate employer. And obviously, that makes it easier to recruit as well. Um, I think I probably hired a little bit too quickly, and we really try to hire slowly now. I think we have a very specific culture of hospitality that we're trying to maintain. And a lot of times I think, founders will wait too long to hire, and they wait so long that they're burned out, and they bring somebody in that's only a 20% fit instead of an 85 or 90% fit, because they need somebody with a pulse. I definitely made that mistake. And so now I'm very sensitive. Every single person that we hire, we've hired 3 people in the last week. Every single person that we hire has to fit not only their job description and what their basic tasks are, their personality's got to fit exactly what they're doing, but also the culture of the company. And I think that's huge, especially as you start to scale, faster and faster. If you don't have those right pieces in place, it's just a house of cards and everything comes crumbling down.
Yeah, no, definitely. I want to touch on something there, which is the functions, the areas that you kept closer to you, um, up until recently, up until you brought those partners, were sales and revenue management. And I hear this a lot. I hear this a lot from people, as far as this being functions that are very tricky to delegate, right? Because unless you're, you know you have 10 million in gross bookings a year, and very important, and very aggressive plans of growth ahead, where you can get people excited on the potential upside of them joining you, like the kind of talent you seem to have brought on there with the partners. I'm sure they're great, right? But I'm sure that the reason they join is because they saw, there's this saying that the founder's vision has to be large enough for everyone within the team, for their vision to fit within the larger vision of the founder. So I guess where I'm trying to go with this is, um, why do you think that it was so lonely before bringing this, two partners on these functions, and why do you think that it's so tricky to delegate those two areas in particular?
Yeah. So I mean, entrepreneurship is a lonely journey regardless, right? I mean, um, it's funny. I'll give you a specific example very early on. And I like most entrepreneurs, this isn't my first gig, right? Like I tried a handful of things that failed, right? Before finding something that really worked and then focusing on that one thing and scaling it. And um, I had an idea for a mobile app that I was working on probably 10 years ago. And I remember I was so excited, and I went to my old neighbor, at the time, and he had actually built a mobile app and sold it for $1 million, to a company that ultimately, it's called Market Leader, got acquired by Trulia, who then got acquired by Zillow. So he was able to ride this acquisition wave for several years. Um, but anyway, so he had already kind of been there, right? And so I remember going to lunch with him, and this is probably like out of 2013 or something like that. And I just had this excitement, and he looked at me and he got really serious. And he said, "I don't think you understand how lonely this journey is." And I don't think that I don't think I realized at that point that I was an introvert. Anyway, I think the sales career that I had previously really forced the extroversion. Um, but it was so jarring to me how he said it that I was just like, man, that's what is he talking about? And it was, I don't even think 48 hours passed. And, I worked like 8 to 6 p.m. in my day job, and then I would work like 5 to 8 a.m. and 6 to whatever at night trying to work on this mobile app, right? And so a couple days later, it's like 2 in the morning, and I'm working on something on like the website, trying to figure out some problem, right? And I'm just like banging my head against the desk, and um at that moment, I was like, "That's what he means." Like, there's nobody. It's the whole like look in the mirror. That's your team, right? Like, and it's a lot. I mean, there's so many things that can go wrong. There's so many government regulations, local, state, federal that you've got to follow, and permitting, and I mean, there's so many things that can go wrong. Um, if you're a huge fan of entrepreneurship like I am, you might have read Shoe Dog, which is about Phil Knight and his journey with Nike. And he talks about there's 4 or 5 times that Nike could have completely gone bankrupt, right, over the last 50 years. And that's the reality. I mean, entrepreneurs, you make 1,000 decisions a day, maybe 50 of them actually mean something. And 5 of them are important to the survival of your business. And if you're wrong at any one time at a certain point in the company's growth life cycle, it could die. And that's a heavy proposition for a lot of people. Um,
Definitely. I
as
remember
far as
from that story, by the way, from that book, the time when he got a fine, something related to
Mhm.
import export fees
Yep.
or something. And he was trying to do the lobbying to try to see if they could get the guy to, just waive the ban. And it was like millions of dollars when Nike was
Yes.
yet like small, and this could have gotten them out of business completely. And so it's like,
Yep.
for me, I was listening to it because I listened to books on Audible, and I was just thinking, my gosh, I mean, if these guys had not gotten creative, because I think they had to do like a TV commercial to try to showcase how they were like fighting against the regulations, and that put some pressure on some higher level, politicians to get involved. And so, like, if they had just tried a conventional like approach, and after 2 3 no's, they would have taken that as an answer, there would be no Nike.
Right. And I think it really is that simple sometimes, right? Especially if you look at a company that's survived for decades like that. Because trends change over time, right? Times change, cycles change. I like to say nothing good lasts forever and nothing bad lasts forever.
What was a moment
And
like
yeah,
that
that's
for
that's
you? For
that's
you
it.
specifically, a moment that you had to do something really out of the box, similar to the Nike story, where like it was literally life or death. You make it or
I
you
think
or you
COVID.
don't. Okay.
Yeah. I think COVID. I mean, it's literally, so I'll draw a parallel here. So we'll do more than $1 million in March bookings alone next month, right? Probably like 1.25 million. March 2020, I'm sorry, April 2020 should have been our very first year that we did $100,000 in a month, right? So to just give you an idea of how much we've grown, that month in April of 2020 with COVID, we did $767 on a single reservation from emergency workers that were traveling to Charleston. And so, most most contingency plans or business downside, when you're looking at your business plan, you're looking at like a 10, 20, 30, 40, maybe even 50% shock in the business. This was literally 100% for almost a quarter for us. And that was lucky because Charleston opened up, relatively quickly compared to a lot of areas in the United States. Um, but nobody has a contingency plan for X number of revenue to 0% of that. And that, talk about creativity. I mean, luckily there were some good government programs to keep small businesses alive during that. Um, but it was rough. I mean, just the hundreds of cancellations overnight. And at that point, by the way, every single asset turned into a liability overnight. So, that's our peak season. Normally they would be occupied. Now they're not. Every single property that we manage no longer has anyone in it. And oh, by the way, people are starting to get really desperate. A lot of jobs disappeared overnight in COVID. A lot of desperation. Now you have these empty houses, and now we've got to patrol and do security. Trying to make sure that all these assets are safe and that we can make it to where we can even earn revenue again. So yeah, it was. I mean, the flexibility that required with that. Um, it's always interesting to me to talk to hospitality companies, because if they didn't have to go through that, then they never saw the worst hospitality recession in the history of mankind,
Well,
right? And and that's yeah, I mean, that's I don't want I'm glad we made it through. Certainly wouldn't wanna do it again.
yeah, no, and what's funny with what you said there in terms of like most most of the times when you're doing any kind of stress testing, if you're underwriting to buy a property, or you're doing some financial modeling to see how your company is going to do, like your worst case scenario is going to be, it's not really the worst case scenario, because you cannot predict the
Right,
worst case
right.
scenario. I mean, the definition of a black swan event is something that hasn't happened before. So if you take the last worst thing that happened and you put that as your stress test worst case thing that can happen, then by definition that's not the worst, that's not a black swan that you're protecting for.
Right.
So it's getting, I guess, used to that, and I guess coming from a corporate America, where maybe there's a little bit more certainty, as far as the stability, paycheck to paycheck, whatever that might be. How have you What has worked for you in terms of training yourself to be okay with that uncertainty?
Yeah, I think that was tough for a little while. I think, I'm in a much different position financially now. Personally, the company certainly is in a much different position. The reality is, when the company nobody wants to loan you any money when you start, right? But once you have some scale and you do have some predictability in your revenue, and you get the 3 years under your belt of IRS returns, and you're able to kind of show that growth, the options, there are a lot more of them, right? It's another reason, I talked about kind of loyalty with my realtor. Is the same thing with banks for me. I have a handful of like local community banks that, they cared about me before I had assets to lend on. And so, I get people reaching out a lot, and I think you grow over time when you can outgrow relationships, but I really try to make things work with the people that have been there since the beginning. It's a lot easier to get those options now, with the history of the company. So I think in terms of stability, like I don't ever feel unstable anymore. I think a lot of things are going right. I think you always have that paranoia having gone through something like COVID, right? I never thought that something like that at that scale, for as long as it was possible. But having gone through it, that's always like in the back of your mind as the worst case scenario. But you try to plan to that, and the reality is, if you can plan appropriately for COVID and weather that, if it were to come around again, you're probably going to be okay.
Hmm. But what about in the early days when you didn't have, assets that banks were willing to, lend you
Ooh,
on, when you didn't
stress.
have, yeah, like how did you manage to
Yeah,
continue hammering, continue, trying day in day out despite the uncertainty, because you're putting all the efforts as if it's going to work. You're hoping it's going to work, but you
totally,
don't know if it's going to work.
totally.
So how do you not quit? What allowed you to not quit?
I think I'm a huge believer in manifestation. Right, it's the old Henry Ford quote of, "Whether you think you can or you can't, you're right." Um, and I think if you have those hesitations and you think like, "Oh man, there's no way I'm gonna make this work," you're talking that into existence. You're literally speaking it into existence. And I think the reverse of that is true. I think the difference between somebody that is successful and somebody that failed is that the successful person just didn't give up when they failed. It doesn't mean that they didn't fail, right? I mean, I've failed a million times to try to get to this point, but you just can't give up. You have to keep fighting, right? And I think like at some point it's interesting, you kind of lift your head up, and after you've done some hires and had some scale, and kind of look around, it's like, wow, here's a culture now, and they care as much as I do, right? Which is very rare, I think, with employees, especially in small businesses. So it's definitely it's a lot, I think, for a long period of time in terms of the stress. I was very fortunate. I had not spent a dime of the money that I made from short-term rentals from the very time that I started all the way until late 2019, early 2020. I traded up from a single family home to a duplex short-term rental and lived in the back and renovated it. And I paid for that renovation out of the money that I had made to date. Um, but I was always kinda, I didn't want that to be what I lived on until I needed to live on it. And so, just being able to kinda squirrel away money over the years, I think certainly helped. It obviously helped soften the blow with COVID. And then the other thing I think, my now wife, girlfriend at the time, I met in August of 2020. So she met me when, like, the business had fallen apart basically. And she knew that I hated my job in corporate America, and she was like, "Just quit. We'll figure it out." And that support from a partner, um, and you can't overstate how important that is. Somebody that's willing to bet on you. The reality is, I'm the best investment that I've ever made in my life, right? And I think for most entrepreneurs, that's true. But you have to continually reinvest in yourself, and you've got to have that inner circle really needs to believe in you as well. Otherwise, when things get tough, the noise just becomes too much. I think a lot of people have struggles with that, their spouse or their parents. "Oh, you can't do that," or "Why don't you just get a normal job?" And, at some point that you believe some of that if you keep it in your life. That goes back to the inner circle. Sometimes people's inner circle, if it's their partner or their family, is actually a negative thing, right? If they're not getting that positive influence, and the belief in their ability to accomplish what they're trying to accomplish. I think more often than not, you don't see that. But certainly behind successful entrepreneurs, you wind up seeing that person that was there for a long time, and really helped kind of manifest things. So that's been huge for me. It's been really cool as well, having had a good inner circle, and running things by people over time, and now kind of being able to pay it forward a little bit. That's really important to me, if for no other reason than to help somebody else, just like somebody helped me 10 years ago.
Yeah, no, definitely. I think that's super important. And let's talk a little bit about that contribution stage that you're at, currently with Kiss Collective. What are you doing there? And also what do you focus on trying to teach, um, when you're contributing with everything you've learned? What's the thing you think is most important that you've learned the hard way that you want to pass along?
Yeah. So with Keys Collective, like I said, hospitality real estate has changed my life, right? And so if I can make somebody's path to that a little bit easier, then that's really the whole point of Keys Collective. The impetus of it was really having gone through COVID, and being able to scale to this point. The listing number you close, once we close on this in Savannah, we actually have around 143 listings. So that's how much we've grown, just since that number that you saw. But really, seeing these like YouTube videos and Instagram reels of people that came in 2021 and 2022 coming out of COVID, and, "Oh, I listed this property and I did rental arbitrage, and now I work 2 hours a week from my laptop in the Caribbean," right? And I think seeing so much of that over so many years, the reality is, like, most of those people haven't actually scaled something, and they've done it a time or two, and then they package a course and sell it. And whether you succeed or fail, they could care less. And I think generally with that industry. And so I actually set up Keys Collective as a nonprofit organization, really just from the very beginning to have a different mission. I would consider myself a subject matter expert, at least in boutique B&Bs and short-term rentals. I still have a lot to learn in terms of boutique hotels as we scale there. Um, but, I really looked at, hey, day one, look at all the things that I failed at. What would I have liked to have known when I was starting out? And so, things that strategies I've used, 1031 tax exchange. My CFO, she has a firm and she worked for 18 years and 4 seasons doing hospitality accounting. And now she's worked for several years doing short term rentals. And so, what types of things should you look out for from a financial perspective? How should you build your business so that it's strong financially? And what type of records should you be keeping? All of those types of things. Virtual assistants. I have 6 virtual assistants now, 5 in the Philippines and 1 in Spain that we just hired. How do you do that? How do you find somebody if that's not some experience that you have or you're not from that country and haven't been there? How do you find those people? How do you vet them? How do you ensure you're paying the right taxes and following the right rules and regulations? So all of those types of things that have kind of helped me scale my business. And then looked at everything from I started CVP originally as rental arbitrage. One of the first people with Keys Collective, who's now a mentor, had a rental arbitrage business. He sold it and he's now buying hotels across the country. Everything from rental arbitrage all the way up to the entrepreneur that has raised millions of dollars of venture capital. Dustin Abney is a local guy in Charleston. He's the CEO of Portoro. He's bought 10 companies in the last 3 years, and he's grown from 0 to about 550 listings under management in that period of time. So rental arbitrage all the way to Dustin and everything in between, right? And I think what I realized getting to a certain scale is that might sound cool, but not everybody wants that. And so when people apply for Keys Collective, we actually look at meet them where they are, right? So what do you really want for your family? What do you want your friends circle to look like? What does a good life financially mean to you? And when you close your eyes and you see happiness, what do you see specifically? And really try to help people define what that vision is. And then from there, it's just reverse engineering the path to get there, right? So if they just want to create another income stream and have some depreciation and manage a short-term rental by themselves, that's totally fine. If they want to go raise millions of dollars of venture capital and do what Dustin's doing, we have that mentor too. So, really trying to meet people where they are, and not force the issue. If somebody doesn't want to scale, I don't want them to. I want them to get to whatever makes them happy, and whatever can help give them financial independence through this asset class. And it really is hospitality real estate specific, just because that's where my current network is and where my knowledge base is.
Yeah, that's super interesting. Where can people learn more if they want to sign up, if they want to participate, get involved in that?
Yep. Yeah. So keyscollective.org. Since we are a nonprofit, ends in .org, but the application is on there. That immediately goes to Jay Kramer, who's one of our original mentees, and he's on the board of directors now. He takes a look to see where you are, and we'll reach out to schedule a call, and then we kind of go from there. We want to understand what somebody's goals are, and then work with them on these initial onboarding exercises. We want them to be efficient in getting how they're getting to where they're trying to get to. So
Makes
that's
sense.
really that's kind of our next piece. Yeah. Really starting to scale Keys Collective and expanding the impact that I think we can help other people have with their families over multi generations.
That's amazing, Josh. Now let's go back to you. You were saying how there's all these different models. You started with arbitrage. There's property management. Some people call it co-hosting. There are some differences, but also the terms are used interchangeably a lot. And then there's investment in traditional properties, and then there's investment in boutique hotels. Help me understand the timeline of you experimenting with these different business models, and what's been the lesson at each of those let's call it the transition points when you've decided to go from, let's say, arbitrage into now property management, or from traditional property investing into now, boutique investment, timeline and key lessons, from switching to from one model to the next.
Yeah, it's so timeline 2012 is when I started renting out my little one bedroom condo. I wound up selling that property and into a single family, 3 bedroom, 2.5 bath short term rental in 2015, and immediately renting out a single room in that 3 bedroom house. As soon as I started doing that, I set up an LLC, Phoenix Capital Management, and that's just my own money that I was investing those dollars through. And I basically had a new guest every 3 days for 18 months. At some point, I moved out and converted that to a whole house rental. Um, what I wound up doing was actually talking to the owner of the two buildings next door. So very similar, same development, built the same year, same floor plan, square footage, that type of stuff. And we had an attorney that lived across the street, 2015, 2016, 2017. And she would get angry, like, oh, I can't believe these people are doing short-term rentals, until she found out how profitable it was, and then she tried to get her property rezoned to do it herself. But as she was doing that, we wanted to make sure that we were following the rules. What are the complaints you're hearing? Is she making any noise lately? And so that person I actually have to thank for CVP. I had already been doing the arbitrage and gotten bought out of contracts. So 2018, 2019, I got bought out of my arbitrage contracts. In 2019, January of 2019, I signed my first traditional property management contract. I define the difference as management and co-hosting between somebody that is actually collecting the money and doing the payouts versus somebody that's doing the other pieces of it, right? And so this was literally, we're collecting the bookings, the money from the reservations, and then doing an owner payout once a month, with traditional management. And so I had been talking to that owner over the course of several years as a result of this attorney across the street. And what I wound up doing over a couple of years was, at the end of the year, I'd say, okay, I'm booked out for the rest of the year. What'd you do on your properties this year, income wise? Oh well, you're in corporate America. Like, I don't want to, take a chance. And okay, next year, hey, what'd you do? Oh, okay. And so that third year, after he had changed management companies twice, um, we were talking, and he said, okay, let's sit down. And he asked me about 30 questions to make sure that we were really comparing apples to apples. And when he looked to it and got to the bottom line, I was beating him by 25%, right? And literally next door, the two properties. And so he signed with me January of 2019, my very first client. He had one other property a couple of blocks away from there. So 3 properties with my first client. He's still with me today. He's since sold 2 of the 3 properties, but we still manage his third one. And actually the others with other owners. But anyway, so he's still with us. That was 2019. And then I personally traded from the single family short-term rental to the duplex in late 2019. The whole time I'm living in it, I'm doing my corporate America job. I'm traveling a lot for it and sales across the country. And I'm taking calls, and then I'm going up to the front and I'm unboxing furniture, and I'm using an Allen wrench. I gave myself tendinosis because I was using an Allen wrench so much, putting together furniture myself. My handyman had the code to the door. He used to knock on the door and go, "Honey, I'm home," at 6 in the morning when he was there to start doing the renovation. And the whole time I'm like, I gotta be out of here by March 1st. That's when peak season starts. So I'm out of there by March 1st, and March 15th, the world shut down. So that lasted. We actually were pretty lucky. It was a couple of months. We reopened in May. The way that we stayed alive, by that time, I had a couple more clients on the management side in addition to this duplex that I owned. Um, and we stayed alive doing midterm rentals. And so as Charleston reopened, and the other parts of the United States, particularly in like Chicago, New York, California, that were not reopening, you started to see this, oh, working from home is okay, right? And people really looking at like, well, where have I always wanted to live? And so they would try different cities to see if that were the case, that they really wanted to put down some roots elsewhere when in lower cost of living places. And so we stayed alive in 2020 doing short-term leases with people anywhere from like 2 weeks all the way to 6 months. Um, and really, I think the last one ran out in early 2021. Um, but worked with all of our owners, owner clients with CVP through that point. Obviously started making money on my own duplex again. And from there, it was, starting to put together deals. So I had a deal I'd been looking at for a long time. It was difficult to get banks to lend on short-term rentals coming out of COVID for obvious reasons. That wasn't a great year. And so, they were like, "Oh, we can lend on this 8 bedroom, 8 bath duplex for you, but you got to come up with X dollars," which was twice what I had at the time. And so, I kept trying to massage that deal, and it stayed on the market for a while, and so I started shopping it and asking people close to me, friends and family, like people normally do when they're starting something out, and got a lot of no's. And I had been looking at properties with a guy. He actually is a general contractor in Charleston. He owns his own custom home building company, and they specialize in renovations on historic properties, which obviously is huge in a historic city like Charleston. We'd been looking at, hey, let's buy something, you renovate it, and I'll manage it, right? We each bring something to the table. This property that I've been looking at didn't need any updating, but I knew that the management wasn't strong and that I could improve the numbers if I could get CVP to manage it. And so I finally brought him this deal, and I said, hey, this isn't what we were normally talking about. There's nothing for you to do here. But I know I can do this, right? And he wrote a check. And so he and I invested 50-50 in that property in 2021, 8 bedroom, 8 bath duplex. Did really well on it. We bought it for $2.1 million in 2021. And then we sold it 13 months later for 2.71. And did a 1031 tax exchange into our second bed and breakfast. So he was my very first guy. I'm super grateful. It's actually spent some time on the phone with him this morning. I forget how much I love working with him because we don't talk every single day anymore. But he owns a third of the 2 bed and breakfasts in Charleston. He actually just built a short-term rental, 4 bed, 4 bath behind CVP's corporate office for me over the last year. As the contractor, he's not an investor in that, but love working with him whenever I can. And that's one of those instances where super grateful that somebody in the inner circle was able to cut a check and take a chance. And I'd like to think that, I've given him a multiple back on that initial return on investment. So that was 21, and we bought our first 2 actual bed and breakfasts. He and I did in 2022. We actually bought our first one April 7th of 2022. And then we shut it down in November, and he did his thing. He put about $900,000 into it. Reopened it March 18th of 2023. That's the Ashley in Charleston, South Carolina. And then the other we bought in December of 22. Ran that through June 6th of 23, and then reopened it January 10th of 24. So it's been open just over a year. And that's the Nicholas, also in Charleston. Number 3, we're under contract now in Savannah. We should close in about 30 or 40 days here. I think April 4th or something is our scheduled closing date. But that one's 16 keys. The 2 that we have in Charleston are 9 keys each. So it's definitely a step up for us. It's also our first property in Savannah, but it also doesn't need a major renovation. So part of the upside for us is its revenue on day one. I've stayed in the property several times already, so we've looked at it operationally to see what can be improved over time. But yeah, at some point I would love to, maybe do a fund or some GPLP investment deals, more comprehensive than what I'm doing today. But we added a third partner to our bed and breakfasts I guess it was around late 2022 as well too. And he has a media company, so he specializes in branding and websites. And so everything we've done for that bed and breakfast brand has been through his company and setting up those things. So it's been a good partnership. And again, I got lucky with the partners that I have on that partnership as well.
And what about the property management side? So you've been focusing on this important milestones as far as deals that you've acquired, that you've participated in, that you know, whether that's, you know, in some cases with some partners as well. But I guess the property management has continued to grow in parallel to all of
Oh
this,
yeah,
which is
totally.
what has led to the scale of an inventory that you manage at the moment. What helped you accelerate that growth? I believe we talked about M&A and roll-ups, and I can't remember if there was an element of that or it was just something that you're also interested in looking into. But what
I'm
allowed you to grow
I
so
did.
fast on the property management side?
Yeah, I bought one small company in North Carolina, but all of it otherwise has been organic. Um, I spent almost 20 years working for defense contractors, supporting primarily the Navy, um, and doing sales. And so, the day that I quit, December 19th of 2019, I had 21 listings under management. And really that day I already had, 1099s. I already had a payroll to make, right, for my management company. And that day, I mean, it's, it's incredibly liberating and also massively intimidating. But I already had payroll to make, right? So immediately I'm like, I gotta sell. And so we grew at 7 months to the day. We grew from 21 to 42 listings. And now I think when you're starting out, you kind of will take whatever you can get in terms of the inventory. And we've been able to kind of, you know, we call it planned churn, but planned for people to roll off of our program if their property doesn't really match what we're trying to, what our ideal customer profile is. But yeah, so 42 by July of 22, and then it really kind of grew from there. By January of 23, we had 55 listings. And then January of 24, we did break 100. So we paused for most of 2024 to focus on just fixing things that had broken operationally from that scale. The sales process had already been professionalized, and then revenue management was next. You asked a while ago why I kept those two. I thought that that's what I was best at until I had people that were better than me in the company to do those things. But those are the first two areas. We call them business units that we professionalized. And then we really kind of just went down the list from there in terms of guest services and housekeeping, and setting up metrics for everybody. And then, professionalizing the entire organization along with benefits and things like that. And then kicking off the sales cycle again. So we actually said no to a lot of inbound inquiries in 2024, just because we just really weren't taking on a whole lot of properties. But now we're back in growth mode again.
So you clearly were doing something right on the homeowner acquisition side of things, and so part of that is you being a good salesperson because you had that sales background. Part of that is you having a solid, product, service, operation to back it up, and believe, going back to the manifestation conversation, that you can do this. But other than that, what allowed you to grow so fast? Let's talk channels, let's talk, tactics, let's talk what are you doing now that you were not doing before. But also, when you say professionalizing the sales process, what does that mean? What does a professional sales process for homeowner acquisition look like for a property management company?
Yeah, I mean eh, it's impressive every time we go through. We continually refine the pitch, but it's everything from how we look at management, right? Which I look at it through the lens of the investor. I don't want to be nickel and dime to death. That's our kind of our core philosophy on the management. I don't want an owner client to get a statement and see 17 different little nickel and diming charges. Oh, we charge $90 to change an air filter type of stuff. So, that is at the core.
So that's your
and
offer. So
obviously
that's your
explained.
offer. So you're basically saying, let's build an offer that's fair, that's got the interests of the investor in mind. So at this point, you're not
Yep.
talking lead generation. You're not talking, sales
Nope.
techniques or process. You're talking the way we like what we offer, right? And what's included and what are the terms,
Yep.
like improving that to be more investor friendly. That makes sense.
Yeah, just in terms of the value proposition, right? What makes us different than our competitors. The other thing, I'm a huge dork for hip hop. As a guy that's almost 44, it's exploded during my lifetime. I've been a fan for like 25 years. But Jay Z had the lyric, "Men lie, women lie, numbers don't." And so the easiest thing for us when we're having these conversations is we seriously crush other competition in terms of the numbers. When you look at the actual returns of very comparable properties, it gets, you can't argue with the data. Uh, so that's huge, right? Obviously, there's a lot of upside over time. The referrals that you get from there are massive. Both client referrals and realtors have also been huge for us. So we do have a realtor referral program. We actually dropped the realtor from the title of that, and so anybody can refer somebody now. So we have like developers that'll refer people. Realtors are still the number one source, but we basically built that referral program around what the expected revenue is, and then we pay that out over the course of 12 months from the time of the first booking once that owner signs. So that referral program has been huge for us. And then once you have the critical mass too, I mean, just the referrals that you get. I mean, these properties trade hands all the time, right? So, when you are getting these referrals, over time as things trade hands again, it just gives you another opportunity to do the sales cycle. So even if we don't win it one time, that property may trade hands in 2 or 3 years, right? And so we'll have the data on it, excuse me, and be able to refresh that when it comes up for sale again.
And when it comes to referrals, just
That's
to,
been
just
huge for
just a
us.
little bit on that to dig a little bit deeper there, because
Mhm.
is it something that just happened organically, or did you have to do certain um, proactive efforts to try to encourage those referrals, both from existing clients as well as from realtors? Because everyone talks about referrals, affiliate marketing, all that stuff, but it's not like you're just going to put your referral program out there and it's magically going to start bringing you a bunch of referrals. So what have you learned in terms
Yeah.
of making it so that people are actually incentivized, not just financially, right? Because the money can be great, but I think there's more to it. What do you think it is
Oh,
that
sure.
that's the missing
The
piece for
the
most affiliate referral programs?
Yeah, I mean, the money doesn't matter if you don't follow through on your value proposition and execution, right? I mean, if a referral, I mean, if a realtor, it's like they're doing a $2 million transaction and they're saying, hey, this is a really good company. I either I work with them personally or I hear great things. And I mean, when someone's doing a transaction, a lot of times, especially for these transactions, they're not local. We have clients all over the country, right? And so they're trusting that realtor's perspective on who they should talk to from a management perspective. And so, that's big. That at least gets you in the door in the conversation. And usually, I mean, the smarter people will say, "Hey, give me 2 or 3 companies, and then tell me what your favorite one is." Right. And you're right. It is easier to get referrals when there's a financial incentive. Um, we couldn't afford to pay people for a long time. Right. And so early, it was a matter of loyalty. Like, okay, well, if you refer somebody, if this property comes up for sale again, we'll come to you. Like, hey, you want to sell? You should use this guy, right? And it kind of creates that synergistic relationship where at least over time that realtor was getting the sales commission, even though there wasn't a financial incentive from CBP at the time. But yeah, we hit a point where we obviously could afford it, so we built it out, and it's easier to get people to give us a shot now. But it's everything from not just like reaching out to have conversations, but we literally, I mean, data nerds, right? So hey, what markets are we in? Who are the top 10 performing realtors? How do we get in with them? Connecting the dots. Most cities are 2 or 3 degrees of separation, so it's a matter of getting to the right person constructively. And if you can get to them through a warm lead, then that's obviously even better for you. But even education, the partner I brought in for sales is getting ready to go to a realtor office in 2 weeks to sit down with their entire office and talk about the short-term rental asset class and how we manage and valuations, how you look at things, the market, all those things. There's no immediate return on that, but over time, obviously, that starts to reap benefits when you invest in other people. So
Yeah,
yeah, it's all of those things.
good points. Good points. And so that's as far as the sales side of things. What about the revenue management? Because you also mentioned that was something you were keeping close to you until you found great partners that had that background from having worked in dynamic pricing tools. Um, what does professionalizing revenue management look like, and why do you think that revenue management cannot be done by just setting up a dynamic pricing tool and crossing your fingers, closing your eyes, and hoping for the best?
Yeah, yeah, I think so many people look for the easy button these days, right? And that's just not realistic. Just because something has dynamic pricing doesn't mean you don't have to monitor it at all. What we noticed coming out of COVID, obviously 21, 22, we had very strong numbers. It was almost like testing the upper limit. Like you could charge whatever you wanted, and people would pay it. And what we do is in Q4, we look at like what do we think is going to happen for the next year based on the data that we're seeing in the markets we operate. And then from there, we kind of formulate a thesis. Okay, well, what do we think is going to happen, and then how do we need to react? Right? How do we generally set the pricing as a result of that thesis? And so, I would say probably earlier than most people in the markets that we operate, we anticipated the return to normalization, right? The pre-COVID normalization of rates. And so we kind of got ahead of that, where a lot of the competition, because they had that set it and forget it mentality you were talking about, they just, they let things go, and they kept prices too high too long. And then you're within this booking window, and now all of a sudden you've got to um, you know, cannibalize yourself almost just to get the occupancy. And we saw that people are kind of catching up now in 2025. But I mean, a lot of 2023 and 2024, you saw people just leaving rates way too high for way too long. Our biggest competitor here in Charleston, until very recently, because they fired them, they were letting an overseas company manage their revenue. And I think it's a big thing. You got to have that local flavor and understanding the dynamics of the market. You can't have somebody that's just basing the decisions on data, doing it in a vacuum. We plug everything in together, right? So it's not just the revenue management that's driven by reviews. Okay, well, if I got two properties right next to each other and this one's performing 10% better, why is that? If they're the exact same property, probably something with the reviews. Okay, well, was it a guest services thing? Is it a maintenance thing? All those departments all have to work together. If the reviews aren't amazing, the maintenance isn't done, we're not communicating properly with guests, you're not going to get great reviews, which impacts the revenue. So all that stuff feeds into each other. And we have kind of a cohesive unit now with a person that's in charge of each business unit to make sure that everything is working together.
Yeah,
But he's a very strong personality. So, and he liked me in terms of the data. So not just understanding the data, but then being able to build that bridge with the other departments to maximize the revenue. So that's been kind of the journey for the last couple of years as we've done this.
definitely. No, and being a company that does that, Angel Hose, as far as revenue management and listing optimization as a service, I totally agree with what you said about not only you cannot set set it and forget it, but also you need to have a very good communication and lines of communication between the local operation and the revenue team, whether that's an in-house revenue team or an outsourced revenue team. I think is less about where the revenue manager is based and more about how much communication there is between the
Totally.
local operation and whoever's handling the revenue side. uh, Revenue cannot be done in a vacuum. You need to consider listing performance. You need to consider reviews, like you said. You need to consider, like, nothing that you can do on the revenue side will matter if the guest is going to arrive and the property is not going to be, super clean and ready. And if it's an issue, there's an issue with the guest, there's not an immediate response. So, there are those two sides of the coin. It's a partnership at the end of the day. It's the local side,
Yep.
plus the revenue and data side. And the challenge is that unless you have someone like you that's very analytical, or even like the people that you've brought on, as partners, there's a reason you had to bring them on as partners, is because usually small to mid-sized operators, tend to struggle with just not having enough of an infrastructure as far as volume to be able to afford the kind of talent that's needed to truly perform. And if you're not an analytical or a data nerd like some people are, myself included, then it's going to be very, very tough. But on another note, I just want to close the loop on the hotel, boutique hotel acquisition side of things. So now you're doing your third investment in that space. What are you
Yep.
looking to do differently with this third acquisition, or what have you done differently with this third acquisition based on what you've learned in your previous two acquisitions as far as the boutique hotel asset class?
Sure. Yeah. I mean, it's so just like with anything that the scale matters, right? So the key count matters. And we wanted to go up to kind of the next rung, if you will. And so we've been looking for a long, I mean, we closed the second one December of 2022. So it's taken a while. Obviously the rate environment shifted on us. And what we realized, I think, even through last year, is that equity expectations had not normalized in comparison to the rate environment, right? So, you might have had a rate that was 3.5 on an investment property, and then they went to 7.5 or 8, and that person was still trying to get the same price for their property instead of bringing it in a little bit. And so that has, I think, finally normalized a little bit. Um, some of these properties, I mean, I think we've been looking in Savannah for 3 years, right? The hard thing about these deals, most people don't want to grind and analyze the number of deals it takes to actually get one done. That's really good. This is probably the best deal that we've seen, I think. Um, but in terms of, we're not doing a major renovation. They just renovated it in the last 3 or 4 years. It will go through each of the suites, each of the 16 rooms, and look for, is there any deferred maintenance? Is there anything that we could spruce up, like a little $3,000 to $5,000 renovation per room? And then the biggest thing operationally, looking at the reviews on the website, there's nobody on site, and that's one thing we've realized with this asset class. Originally, we were kind of thinking of maybe glorified Airbnb, but the reality is if you're trying to have a hotel experience, you need a human there, right? And so we've definitely seen we have a concierge on site at our second B&B and not our first, and so we've definitely seen the difference there. And so that's something that immediately right out of the gate we're going to do is hire a general manager for the property, and have somebody on site. If you look at the negative reviews, they have several hundred at a good rating. So we're taking over the brand, the IP as well. Um, but the negative reviews are all around. Oh no, there was nobody on site. My code didn't work until 15 minutes before check-in, and I was there 3 hours early. Well, if a room is done, we let people check in, right? We don't try to make an extra money for early check-in. If it's ready, we let people check in. Those little things really matter, I think, especially if you have a smaller property like this. It sounds so simple operationally, but if you can take, those handful of 3 and 4 stars and turn them into 4 and 5 star reviews, that really makes a difference over the course of a year in terms of revenue. So yeah, nothing huge in terms of like the actual renovation, although we are looking at adding a pool, which makes a big deal in the southeast. It's hot and humid in summer, so that's the big thing that we're looking to do as far as renovation. But everything else, we just don't break it, and let's improve the communications and the processes where we can. and see if we can squeeze an extra little bit of revenue out of it.
And the financing side of things for a boutique hotel, how does that differ from multifamily commercial real estate or single family, loan to values? Like what else is different
Yep.
in terms of investing
Yep.
in this asset class in boutique hotels?
It's generally very different. We our very first one, I think we did a 74% loan to value. The same bank actually let us do a 80% loan to value on the second B&B because we had that relationship. Typically in this asset class, you're seeing like 65%
That's
or
what I was gonna
70%
say. I
loan
I,
to
I
value.
usually hear like lower loan to values, and
Yeah.
I've heard, and maybe it's because it's Canada here, and so things are a little bit more controlled and whatnot, and it's a little bit harder to get loans for this kind of product because you don't have local banks here like you do in the US. You can only deal with the large banks. So imagine that was your only option.
Oh,
I heard
tough.
50% loan to value once
Yeah.
that I was looking into a deal. So it's like, wow, that's a lot of equity that you.
Which changes everything. Right? I mean, even if you're gonna go out and raise it, if you got 10 or 15, 20% yourself, that's still, I mean, this deal is $5.25 million, right? That's still a significant amount of money you've got to go out and try to raise. And then the numbers have to work for everybody. Those people need a return on their investment too. So it can certainly complicate the deal. This one, we're actually able to do 85% loan to value. We originally were going to do an SBA loan, but instead, there's actually a first lien, second lien position that this bank is able to do. And the reason is because they have the loan now. And so, that's something that I think a lot of people probably don't pay attention to if you don't have the experience. If the current bank loves the deal and they've loaned on it in the last 5 years, they're going to want to keep the loan because the rate's going to be higher, right? As long as the quality of the borrower is there, they already know the project, they know the deal, and so they'll want to keep it at a higher rate in their loan portfolio. So that's why we're going with the existing company. But yeah, it's really, I think it's very deal specific as well too. It depends on the number of keys and revenue. It depends on the strength of the borrower. It depends on the strength of the bank as well too. If you have a tiny bank, they may want you to do a 60% or 50%. Or a huge bank, they could care less. They'll want that 50 or 60%, right? I think the sweet spot's probably somewhere in the middle.
Yeah. Yeah. No, and listen, man, I could keep you here for 2 more hours because I have follow-up questions around how to do the actual underwriting here as well. The exit strategies, might also be different when you're looking at a boutique hotel than other asset classes. But listen, we'll wrap it up for now and maybe leave this suspense here for part two. If ever we get a chance to do a part two, this has been amazing. Josh, thanks so much for taking the time and sharing all those insights and opening up with so many of those lessons and stories. Really, really appreciate you having taken the time. It was a lot of fun.
Likewise, I love doing this. Happy to come back if you want in the future. And thank you again for having me. I appreciate you, man.
Amazing. Have a good one.